Time now for business. Kate Moody joins us, starting with the markets and steep sell-off as the coronavirus continues, sadly, to spread.
Yes, because it's become clear that the outbreak is far from contained. Analysts say investors had been counting on a fairly quick resolution. Fear has now set in. We saw shares of airlines and travel companies, as well as insurance firms, among the hardest hit. Oil prices dropped around 3.5%, while gold prices hit a 7-year high. Now, that was the opening bell on Wall Street, but by the closing, Wall Street had actually erased its gains for the year to date. The Dow Jones plunged over 1,000 points, the biggest one-day drop in 2 years. Chip makers ended firmly in the red. The tech sector, of course, especially exposed to the slowdown in China. Meanwhile, the yield on 10-year Treasury bonds declined to a new record low. Italy's stock market saw its biggest one-day drop since 2016. It was down 5.5% in Milan. UK stocks had their worst day in 5 years, while the DAX and CAC 40 each lost around 4%. Well, analysts have warned that the coronavirus outbreak could thrust Italy into its fourth recession in 12 years. The economy is already struggling. It contracted in the final 3 months of last year and expanded just 0.2% for 2019 as a whole. Predictions for this year were still subdued even before the virus took hold there. The northern regions of Lombardy and Veneto, which are home to Milan and Venice, and the largest number of cases, contribute about a third of the country's economic activity. Local authorities have now banned public gatherings, including sporting events and the Venice Carnival. That's going to quickly start weighing on the tourism industry, which is responsible for about 13% of Italy's economy. Hotel associations in the north say about 25% of their reservations have already been cancelled. And that is, of course, just the beginning. Exports will also be impacted, everything from fashion to machinery. Many companies are suffering shortages in their supply chains or less demand as the virus continues to spread. Meanwhile, Chinese tech giant Huawei has insisted the virus won't affect its rollout of new products and technology. On Monday, it launched a new line of tablets and a folding smartphone via a video conference. The Mobile World Conference had been due to kick off this week in Barcelona. It was cancelled because of health concerns. Moving on, 2 credit agencies have downgraded Lebanon's rating as its financial crisis deepens. Moody's and S&P Global Ratings both pushed long-term rating further into junk territory, the latter saying that a default is now, quote, virtually certain. The Lebanese government owes some $1.2 billion in debt repayments in early March, and it may not be able to meet its obligations. The International Monetary Fund has been advising Beirut on how to deal with its public debt. At over 155% of GDP, it is among the highest rates in the world. Well, U.S. President Donald Trump received a warm welcome in India as he kicked off his first official visit there. He pledged to strengthen bilateral ties, but trade relations have been tense. Aaron Ogunki reports.
Donald Trump and Narendra Modi both hailed each other's policies of prioritizing national economic interests above all else. But that shared view may also be the one that prevents the two from compromise. President Trump's America First policy and Prime Minister Modi's similar Make in India campaign have diminished the prospect of a trade deal between the U.S. and India. Though the U.S. president called Modi a tough negotiator on Monday, he nonetheless expressed optimism about reaching a deal.
We are in the early stages of discussion for an incredible trade agreement to reduce barriers of investment between the United States and India. And I am optimistic that working together, the Prime Minister and I can reach a fantastic deal that's good and even great for both of our countries.
The United States is one of India's most important trading partners, with bilateral trade hitting $142.6 billion in 2018. India is the United States' 12th largest goods export market. But trade tensions between the two countries have reached new heights since President Trump took office. Last June, Washington ramped up pressure on New Delhi by ending its preferential trade status, claiming India had failed to provide the U.S. with adequate access to its markets. India was the largest beneficiary of the program, which allowed $5.6 billion worth of its goods to enter the United States duty-free. Washington also slaps tariffs on Indian steel and aluminum. In response, India imposed its own retaliatory tariffs on 28 U.S. products, including almonds, apples, and walnuts.
We will, of course, be following that visit as it continues, Mark.
Excellent. Kate, thank you very much indeed. Great to see you. Kate Moody with all the business.